Hi, I'm Jarrad Brown, Australian expat financial planner based here in Singapore, working with Australians all over the world. Welcome to my video series where we tackle some of the tough personal finance questions and topics for Australians all over. Today I'm going to share with you 10 top tips to financially recover from a divorce. Now, divorce rates are 2 to 3% typically in Australia, but separations can be a lot higher. We may see this rate spike as a result of COVID and everything else that's going on at the moment. There's a lot more stress, a lot more tension in households all over the world at the moment. So we need to plan, we need to prepare. As unhappy as this topic may be, we do need to make sure that we can get back on track to achieve our financial goals. So today I'm going to share with you my 10 top tips. I hope you find them helpful. If you have any questions, do reach out. I'd be more than happy to hear from you. So let's dive right in to my 10 top tips. So the first one, the most basic but the most important, is to sit down, pen and paper, or with your laptop or iPad, and start writing out what your financial goals are. Now, if you've just been through a divorce or you're going through a divorce, chances are your financial goals may be a little bit different. Are you now going to be responsible for your children's education, saving for their first house, saving for your own retirement? Whatever it may be, chances are the goalposts may have changed. So it's important to sit down and work out what's really important. Once you have those goals, either by yourself or with an advisor, you can start to map out exactly how you're going to achieve them. So this is a very important first step. The second one is to quite simply ensure that you have a plan in place. Put some time in your calendar, nominate a day each week or a day each month where all you do is deal with your household finances. It's very, very common that only one person or one member of a relationship or a family will deal with the bills, cover the retirement savings, pay for the education, and know the household finances inside out. And quite often the other has no real idea about what the bills may be or what's going where. So if it's now all down to you, it's very important to set the time aside. If you're not sure where to start, reach out to an advisor who can just charge by the hour or for some time to start to walk you through all the basic steps that you need to have in place and all of the things that you need to think about and develop a bit of a roadmap. My third tip is to increase your financial literacy and education. Now, obviously my first self-serving tip here, subscribe to my video, my YouTube channel. I hope you find them helpful. I hope that helps to boost your financial literacy. That's certainly one of the goals of the channel here. But start reading more, subscribe to online courses, talk to advisors, start reading more, get books, download ebooks. Whatever you can do to boost your own financial intelligence is certainly going to help you later on. Don't solely rely on the advice of friends or colleagues. While they may have the best of intentions, they may not be equipped to actually provide you with sound or objective advice. My fourth tip is to manage the risks that you can. Now, obviously there are risks in life that we simply can't manage, but then there are those that we can. So by the risks that we can manage, I mean life insurance, personal insurances, health insurance, dental, whatever it may be. Start thinking through the risks that we now have, particularly if you've been through a divorce, you're now single, you're the sole breadwinner. If you have financial dependents, i.e. children, we need to start thinking through how we're going to protect ourselves if the worst were to occur. So it's important to address each of these risks, outline them, and work out a bit of a plan for each of those things if they were to take place. Tip number 5 is to review your credit rating. Now, this one may not seem terribly important, but you may find, or you may have found over the years, that you've applied for loans, you've been through various financial exercises as a couple that you may or may not recall, and that may have had an impact on your credit rating. So if you have any adverse credit scores, it's important to try and address these as early as you can, because if you're looking to get a loan, to buy a house in Australia, or to refinance a loan or whatever it may be, you may find that an adverse credit rating or any negatives on your credit file may actually dampen your chances for a loan later on. So the sooner you can get onto these, the better. The reports are free, you can access them once a year, complimentary, they're online, very simple. If you're not sure, do reach out to a qualified mortgage broker and they will certainly be able to assist. Tip number 6 is to review your investments. So if you've taken over a share portfolio or some managed funds or an investment property portfolio, make sure that you're aware of the numbers. The ins, the outs, how it's performing, where it's invested. Are you saving regularly? Does it suit your own risk profile? Is it on track with your own investment goals? Again, you may want to sit down with a financial planner here, start to review your asset allocation, the risk, the volatility, and make sure that you know the ins and outs of your investment strategy, and you also know exactly how you're going to track it going forward. Tip number 7, and a very basic one, is to start today. It may seem like a daunting task or overwhelming. There's a lot you've got to get through, particularly if you've just been through a divorce or you're going through it now. But the sooner you start, the more empowered you're going to feel, the more comfortable you're going to feel, knowing that you've got goals in place and your finances are on track. Number 8 is to set up a budget. You probably now have a bit of a change in cash flow. You're the sole breadwinner for your household. You've got your own expenses. Work out the inflows, the outflows. Can you create any savings? How much are you saving each month or week or quarter or however you'd like to track your own budget and expenses, and make sure that it actually aligns with your own financial goals. If you can get rid of any expenses that you don't need anymore, wonderful, get rid of them. If you can find other ways to save more money, start putting those things into place as soon as you possibly can. My 9th and second last tip is to take stock of your current financial position. So this is basically creating your own balance sheet, your own personal balance sheet. How much are you worth? Now this is quite simply listing out all of your assets, listing out all of your liabilities. Assets minus your liabilities gives you your net worth, your own personal balance sheet. Now, typically it's a very good idea to track your own balance sheet at least once a year. Are you on track? Is that increasing? Is it decreasing? Is there anything you need to change? Are you appropriately diversified? Do you need to increase your share exposure, your equities exposure, or bump up or decrease your cash? Any other changes that you may need to make? This is going to give you a very clear picture of exactly where you're at. My 10th and final tip for you is to stay on track. Now, by this, I don't mean just wishfully thinking that you're going to remain on track to actually achieving your financial goals, but I mean developing a system either by yourself or with your financial planner where you can sit down and make sure that you're genuinely on track to achieve exactly what you've set out to achieve. If you need to adjust your goals, you have a system in place to make those adjustments as necessary. I hope that these 10 tips have been helpful. If you have any questions at all, please do feel free to reach out to me. I'd be more than happy to hear from you and answer any queries that you have. If you have any ideas for our future videos, please do feel free to reach out and let me know. I'd love to hear from you. Thank you very much for tuning in. Please do subscribe, and I look forward to seeing you next time. Thank you.